Do you want to diversify your portfolio and potentially increase your returns? Then you're in the right place. In this video, we'll explore some of the most promising alternative investment opportunities available today. These investments are gaining popularity as people seek new ways to diversify their portfolios and potentially generate higher returns. From real estate to art and collectibles, we'll discuss the potential benefits and risks of the following 5 alternative investment opportunities. 1. Real estate investment trusts, REITs. 2. Cryptocurrencies. 3. Art and collectibles. 4. Private equity. 5. Agricultural land. Whether you're a seasoned investor or just starting out, this video is packed with valuable insights to help you make informed investment decisions in 2023 and beyond. So, let's get started.
Welcome to The Strategist.
Top 5 alternative investment opportunities for 2023. Number 1. Real estate investment trusts, REITs. Real estate investment trusts, REITs, are companies that own, operate, or finance income-generating real estate properties. REITs provide investors with the opportunity to invest in real estate without the hassle of buying and managing physical property. REITs can own a variety of different types of real estate, including office buildings, apartments, hotels, shopping centers, and more. How REITs work. REITs are structured like other publicly traded companies and can be bought and sold on stock exchanges just like stocks. When you invest in a REIT, you become a shareholder in the company and own a piece of the real estate assets that it owns. Benefits of investing in REITs. Diversification. REITs provide investors with exposure to the real estate market, which can help diversify a portfolio and potentially reduce risk. Passive income. REITs often pay out a substantial portion of their income in the form of dividends, making them an attractive option for income-seeking investors. Professional management. REITs are managed by professional real estate managers who have the expertise and resources to identify and invest in income-generating properties. This can be especially beneficial for investors who do not have the time or resources to manage their own real estate investments. Shortcomings of investing in REITs. Market risk. Just like stocks, REITs are subject to market risk, and their value can fluctuate based on a variety of factors, including interest rates, economic conditions, and real estate market trends. High fees. REITs often have high management fees, which can eat into investment returns. Number 2. Cryptocurrencies. Cryptocurrencies are digital or virtual currencies that use cryptography to secure and verify transactions. The most well-known cryptocurrency is Bitcoin, but there are many others, including Ethereum, Ripple, and Litecoin. Cryptocurrencies have seen a surge in popularity in recent years, and many investors see them as a hedge against inflation. While cryptocurrencies can be volatile, they have the potential to offer high returns over the long term. How cryptocurrencies work. Cryptocurrencies use blockchain technology, a secure, decentralized ledger, to keep track of transactions. Each transaction is verified by a network of computers, making it virtually impossible to manipulate or falsify records. Cryptocurrency transactions are also fast and secure, and they can be done anywhere in the world with an internet connection. Advantages of investing in cryptocurrencies. Potential for high returns. Cryptocurrencies have seen tremendous growth in recent years and have the potential to offer high returns to investors over the long term. Hedge against inflation. Many investors see cryptocurrencies as a hedge against inflation, as the supply of most cryptocurrencies is limited, making them a potential safe haven asset. Decentralization. Cryptocurrencies are decentralized, meaning that they operate independently of central banks and governments. This can make them more resilient to economic and political changes. Disadvantages of investing in cryptocurrencies. Volatility. Cryptocurrencies can be extremely volatile, and their value can fluctuate wildly in a short period of time. Lack of regulation. Cryptocurrencies are largely unregulated, and there is a risk that they could be banned or otherwise restricted by governments in the future. Lack of understanding. Cryptocurrencies are a relatively new and complex investment, and many people do not fully understand how they work or the risks associated with them. Number 3. Art and collectibles. Investing in art and collectibles can be a unique way to diversify your portfolio. Art and collectibles refer to a diverse range of physical items, including fine art, wine, classic cars, stamps, coins, and other rare and unique items that are valued for their scarcity and aesthetic appeal. Art and collectibles can be a good alternative investment opportunity because they are not directly tied to the stock market and often hold their value well over time. How it works. Art and collectibles can be bought and sold at auction houses, art galleries, and other specialty dealers. The value of these items can increase over time, making them a potential investment opportunity for those looking to diversify their portfolio. It is important to note that the value of art and collectibles can be influenced by a range of factors, including condition, rarity, and historical significance. Some advantages are: diversification. Art and collectibles can be a good way to diversify your portfolio, as they are not directly tied to the stock market and often hold their value well over time. Potential for long-term appreciation. Many types of art and collectibles have a history of appreciating in value over the long term, providing the potential for significant returns to investors. Unique investment opportunity. Investing in art and collectibles can be a unique and exciting way to invest, as it allows you to build a collection of items that you are passionate about. Disadvantages of investing in art and collectibles. Lack of liquidity. Art and collectibles can be difficult to sell, and it may take a long time to find a buyer willing to pay the desired price. Expertise required. Investing in art and collectibles requires a significant amount of knowledge and expertise, and it can be difficult for inexperienced investors to assess the true value of these items. Fragile and prone to damage. Physical art and collectible items can be fragile and prone to damage, which can impact their value and make them difficult to insure. Investing in art and collectibles can be a unique and potentially rewarding alternative investment opportunity. However, it's important to consider the potential lack of liquidity and expertise required, as well as the fragility of these items, before making any investment decisions. It may also be helpful to consult with a financial advisor or an expert in the specific field of art or collectibles you are interested in. Number 4. Private equity. Private equity involves investing in privately held companies that are not publicly traded on stock exchanges. Private equity investors provide capital to these companies in exchange for an ownership stake and a share of the company's future profits. This can be a great alternative investment opportunity for those looking to potentially generate higher returns, as private equity firms often target companies with strong growth potential. However, private equity investments are typically less liquid than traditional investments, and they can be more difficult to value. How private equity works. Private equity firms raise capital from institutional investors, such as pension funds and endowments, and then use that capital to make investments in private companies. The firms typically take an active role in managing the companies they invest in, working to improve operations and growth, with the goal of eventually selling their ownership stake for a profit. Rewards of investing in private equity. Potential for high returns. Private equity investments have the potential to offer high returns, as private equity firms work to improve the performance of the companies they invest in. Access to exclusive investment opportunities. Private equity investments provide access to exclusive investment opportunities that may not be available to the general public. Professional management. Private equity firms are made up of experienced investment professionals who are well equipped to identify and invest in promising companies. Difficulties of investing in private equity. Lack of liquidity. Private equity investments are illiquid, meaning that they cannot be easily sold once they have been made. This can be a disadvantage for investors who need to access their money in the short term. High fees. Private equity firms typically charge high fees, which can eat into investment returns. Lack of transparency. Private companies are not required to disclose financial information to the public, making it difficult for investors to fully understand the financial health of the companies they are investing in. Number 5. Agricultural land. Agricultural land refers to land that is used for farming, ranching, and other agricultural purposes. This type of land is often used to grow crops, raise livestock, and produce other agricultural products. Investing in agricultural land can be a way to benefit from the growing demand for food as the world's population continues to increase. Agricultural land can also serve as a hedge against inflation, as the price of food is often directly tied to inflation. Additionally, agricultural land can provide a steady stream of income through the sale of crops and other agricultural products. How agricultural land works as an investment. Agricultural land can be purchased for investment purposes and managed by the owner or by a professional manager. The value of agricultural land is often tied to the price of crops and other agricultural products, as well as factors such as the demand for food, population growth, and inflation. Agricultural land can also generate income through the sale of crops and other agricultural products, making it a potentially lucrative investment opportunity. Some advantages are: potential for steady income. Agricultural land can provide a steady stream of income through the sale of crops and other agricultural products. Hedge against inflation. The price of food is often directly tied to inflation, making agricultural land a potential hedge against rising prices. Growing demand for food. As the world's population continues to increase, the demand for food is expected to grow, making agricultural land a potentially attractive investment opportunity. Some disadvantages of investing in agricultural land. Long-term investment. Agricultural land is typically considered a long-term investment, as it can take several years for crops to mature and generate income. Weather dependent. The success of agricultural land investments can be heavily influenced by weather conditions, which can impact crop yields and overall investment returns. Capital intensive. Purchasing and managing agricultural land can be capital intensive, and it may be necessary to invest a significant amount of money upfront to get started. Investing in agricultural land can be a way to benefit from the growing demand for food and serve as a hedge against inflation. However, it's important to consider the long-term nature of these investments, the impact of weather conditions, and the capital requirements associated with agricultural land investments before making any investment decisions. It may also be helpful to consult with a financial advisor or an expert in agricultural land investing to determine if this type of investment is right for you. So there you have it, the top 5 alternative investment opportunities for 2023. As with any investment, it's important to do your research and consider your own financial goals and risk tolerance before investing. Alternative investments can be a great way to diversify your portfolio and potentially generate higher returns, but they also come with their own set of risks and challenges. So, be sure to consult with a financial advisor before making any investment decisions. Thanks for watching. If you enjoyed this video, be sure to like and subscribe for more great content. See you in the next video.